Welcome back everyone to another session on GST amendments. So in this particular session, I would like to walk you through the amendments that has happened in exemption chapter. So if you want the full details of exemption chapter and then a complete walkthrough of that, I'll recommend you to watch the webinar video. Now I'm going to take you through what are the changes that has happened. Particularly there are smaller changes here and there that has happened with existing exemption. Also there are few new exemption that has been introduced. So I'm not going to take a lot of time in this. I'm going to have a crisp discussion wherein I'll explain you what are the changes that has happened in exemption chapter. So exemption has been given on various goods and services with respect to GST. So the very basic understanding you need to have, once an activity will be termed as supply, then we will have to look at whether it's a taxable supply or it's an exempt supply. Now in exempt supply cases, we have supplies where the government can come and give exemption in section 11 of CGST Act or section 6 of IGST Act, where they can come up with a notification on the public interest to do so. By a notification or a special order, they can give exemption to certain goods or services. Now there's been a lot of goods and services that are being exempted, and for our syllabus, which means that for a CA inter and CA final syllabus, you do have exemptions that is applicable for services only. Even though goods are also exempted, only service exemption is available, and I'll strongly recommend you go through that industry discussion that we generally used to have in the classes. Now what I want to discuss in addition to that here is what are the changes that has happened in exemption. Since its exemption is a notification, okay, so the point that you need to understand is that exemption is a notification. Government is empowered to always withdraw an exemption, amend an exemption, come up with another exemption, because Parliament has given that power to the government. They can do that upon public interest to do so. So they have streamlined certain exemption. If you want to look at which are the cases which are streamlined, which is applicable for the examination, we will look at each of the cases. Some of them are applicable for both inter and final, and some of them are applicable only for CA final. I'll also tell you which one is applicable only for final. So first one, let us look at it as applicable for both. It is services of government and advocates. Now if you really go ahead and try to understand government services, you would have seen in our regular notes that when government is providing a service, government or local authority, central government, state government, union territory, panchayat, municipality, and all the local authorities, when they provide a service, it is generally exempted, other than for these three services that we have already seen, which if the government provides also, it is taxable. It is taxable under forward charge, like Department of Post selected services, services in relation to vessel and aircraft, transportation of goods or passengers. There are few exemptions that is available in a different entry. And services provided to a business entity, by government or local authority provides a service to a business entity, that is taxable under GST. Under what charge? A reverse charge mechanism. So generic understanding is that when government is providing services to a business entity, it happens to be a commercial service, and that is to be taxed under RCM. But there are exemptions that is given to small business entities. What is this exemption all about? If the business entity who is receiving the services, their turnover is below the threshold limit, then they need not pay taxes there. Earlier, this threshold limit was given exactly the amount. What I meant is that earlier they said those business entity whose previous year turnover is less than 20 lakhs or 10 lakhs. Now what happens is that when they prescribe these amount in the exemption, when they change the threshold limit, the exemption also needs to be correspondingly updated. So that is what they have specifically done with this particular case. They said if a small business entity, what do you mean by small business entity? A business entity whose turnover is less than or equal to the threshold limit for registration. We know the threshold limit for registration is different in different state. It can be 40 lakhs, it can be 20 lakhs, it can be 10 lakhs. If their turnover is less than that, if they receive services from a government, even though the recipient is business entity, it is exempted. The moment it is exempted, there is no question of charge. Now let me let me write down an example so that you can understand it better. Say, this is Kerala government. They have given a license to a business entity. Suppose this is ABC Associates. They have given a business license. Okay, some kind of a mining they're doing. Now I'm going to give you two cases. Case 1. ABC Associates is supplier of service. What is the limit for registration for supplier of service in Kerala? It is 20 lakhs. Case 1. This ABC Associates turnover is 18 lakhs. Is it taxable or exempted? It is exempted. Suppose ABC Associate is paying 1 lakh rupees to the government. This 1 lakh is not subject to GST. It is exempted because their turnover is less than 20 lakhs, which is the threshold limit. Case 2. Their turnover is, previous year turnover is 55 lakhs in the last financial year, which is more than 20 lakhs. It becomes taxable. So the exemption is not applicable for them. It is taxable under what charge? Reverse charge mechanism. Who has to pay it? ABC Associates will pay taxes under RCM. Now, case 3. I'm going to add one more case. Carefully follow this. This is going to be a cracker for you. Their previous year turnover is 10 lakhs, but they are voluntarily registered. They took voluntary registration. Whether it is taxable or it is exempted, it is still exempted. This is the point. It is not whether they are registered or not. If their turnover is below the threshold limit, then they are considered to be a small business entity and exemption is available. The same case will be applicable not only when the supplier is government, when the supplier is advocate. Advocate, which could be an individual advocate or firm of advocates, including a senior advocate or an arbitral tribunal. All of them, there is an entry in like this wherein they say that if they provide services to a small business entity, it is going to be exempted. Now, what is small business entity here? When their turnover is less than the threshold limit. What is the threshold limit? We have 40 lakhs, 20 lakhs, 10 lakhs, depending upon which state what they fall into and whether they're supplier of goods or supplier of services. So you'll have to see all that and then fix a limit for them. I hope this is understandable for you. Then next one, second amendment that has happened with exemption is now if there is a service by way of providing an accommodation, be it in a hotel, in guest house. So I'm going to a guest house or I'm going to a hotel and booking a room, a unit of accommodation. I'm giving it on rent for accommodation in a guest house unit, in lodge, etc. Earlier, it is exempted if the realized value, again I'm specifically saying realized rent is less than 1,000 rupees. Now they said less than or equal to 1,000 rupees. So if I go and the menu says that for standard AC room it is 1,500, I bargain and make it 1,000 rupees. Whether it is exempted, it will be still exempted. Realized rent for a unit of accommodation, which could be a room, is with 1,000, it is exempted. Okay. Now, next is upfront premium. Now, we will look at upfront premium, then come back because the other one is applicable only for finals. So, there was an exemption. You can look at the screen. There was an exemption on long-term lease, which is more than 30 years. There is an upfront amount that is being paid, even if it is received in installments, for lease of industrial plot or financial business plot, which is to be used for the said purpose after being given on lease. Then that lease is given by government or a governmental undertaking constituted for this particular purpose. Now, what are the amendments that we have? So, the earlier exemption was like this. They said if the government or governmental undertaking, which is for developmental of industry or development of financial plot, and they have so much of plot available, and that they give it on long-term lease, which is more than 30 years, to business entities. So, if you go to Palakkad side, if you go to Kottayam side, there are a lot of plots which the government owns, which they are classified as industrial area. So that has been given on lease to industries to construct their factories there, or it can be even given to financial institution to conduct their financial business there. So if that is given on a long-term lease for more than 30 years, and because it is a long-term lease, apart from the rent, there will be something called as an upfront premium that you will have to pay. That upfront premium is what is exempted. You don't need to pay any GST on that. Now, they have given a couple of more clarification to that, and the clarification says, one, they're saying that even if this particular, say for example, the upfront premium for a 35-year contract for an 1 acre land was 1 crore rupees. Now, it is 1 crore upfront, but I went to the government, I said, see, I don't have 1 crore right now, so let me pay you by installments. That is okay. The government says it is okay, you're paying it in installments. The only question that we are asking here is it should be an upfront, it should be fixed upfront. It can be paid in installments also. So that 1 crore is still not taxable. Then second one, if you have taken this premise for lease, a long-term lease, and you have not used for the said purpose, in such cases, your exemption could be withdrawn and the tax could be recovered from you. So it has to be used for the said purpose. Then governmental undertaking is being classified. They said even 20% government holding entities will also be considered to be a governmental undertakings. Their upfront premium is also not subject to GST. So what will happen effectively? Since upfront premium is not subject to GST, upfront premium amount will get reduced. Thereby, government will be able to lease out more number of places with a lease amount which is not going to cost them really high. This is what is the impact of this amendment. Then there is one case which is applicable only for CA final, which is an exemption on IGST on transportation of goods by vessel or aircraft from India to outside India, which is exempted. It was earlier exempted till 30th of September 2019. Now that exemption is extended for one more year. It is exempted till 30th of September 2020. So, which means that from India, I am doing export. So for me to export, I will either use vessel, which is the seaways, or I will use the airways. Now both of this, I require the support of an aircraft or a vessel, which means I require the support of people who are in the industry of transportation of goods by aircraft or vessel. Okay. So what you have to understand here is government intention is to promote export. How will you promote export? Whatever associated cost people will incur for the export has to be cheaper. So they decided if somebody is exporting from India to outside India, then all their transportation charges will not be subject to GST. So look at this again. Transportation of goods by vessel or aircraft from India to outside India is exempted up to 30th of September 2020. They just kept extending this. Now, there are a few new exemptions that has come. First one is FIFA Under 17 Women World Cup, all the services relating to that is exempted. So this is all you will have to remember for the examination. If the examination question contains FIFA Under 17 Women's World Cup, then you said it is exempted. No, GST would be applicable. Then, giving electronically operated vehicle, which is to carry more than 12 passengers to a local authority. So if you are someone who's owning an electronically operated vehicle, more than 12 passengers, which means you have an electronic bus and you're giving this bus on rent to Cochin Corporation, which is a local authority, and you're getting monthly 1 lakh rupees. They're saying that it is exempted. So they wanted to promote electronically EOV, electronically operated vehicles. So because of that, giving this electronically operated vehicle on hire to a local authority will be exempted. Okay, next, there is a set of exemption that is given on storage and warehousing of a set of product. I will read out the exemption for all of you just to get full understanding on that. And this particular exemption, gives a lot of differences to whatever you have learned earlier. So earlier we had, when we had discussions on agriculture sector and then related exemptions, I had told you that only an agriculture produce will get exemption on following activity, which is loading, unloading, packing, storage and warehouse. Wherein now they have removed this. They said there are certain products which might not be an agriculture produce. What is an agriculture produce? Generally, the produce out of this agriculture activity, the first product that comes in. Okay, so your first product, when it goes through a set of activity, like say for example, dal is not an agriculture produce. The whole pulse gram, rajma is an agriculture produce. Similarly, jaggery is not an agriculture produce. Sugarcane is an agriculture produce. That's the first product. Now this exemption, all the exemption was applicable when the activity is carried out on the agriculture produce. Now there has been an amendment that has happened on this, wherein they are trying to communicate to you that you will still get exemption on warehouse and storage of certain product, which is not even an agriculture produce by the definition. So they're just giving you more clarification on that. But packing, loading, unloading, still exemption is applicable only to agriculture produce. So they said services by way of storage and warehousing of cereals, pulses, fruits, nuts, vegetables, spices, copra, sugarcane, jaggery, raw vegetable fibers such as cotton, flax, jute, indigo, unmanufactured tobacco, betel leaves, sendu leaves, coffee, tea are exempted. Which means impact will be that of these products, only loading, unloading and packing will become taxable if they are not agriculture produce. This is the understanding we have. So earlier we had clarification wherein coffee powder, tea powder, it was taxable when you do storage and warehousing. Now that is exempted. But packing, loading, unloading will still become taxable because only tea leaves are agriculture produce, not tea powder. Coffee, processed coffee is not agriculture produce. Coffee beans are agriculture produce. Similarly, you had jaggery is not an agriculture produce, but now storage and warehouse is exempted. Next is, Central Armed Police Force life insurance premiums has been exempted. General insurance schemes, there is one more exemption that has been added for Bangla Sasya Bima Yojanas. Then, in education, DG Shipping approved maritime courses. Director General of Shipping approved maritime courses. All these marine courses which are approved by Director General of Shipping, that is also going to be considered to be a course which will be eligible for exemption on the course fee. Now there are two clarifications that we have to discuss. One is on EMI, another one is on monthly membership to the Residential Welfare Association. Let's look at that. So Circular 102/21/2019 clarifies how GST will be applicable on EMI transaction. Now I'm going to give you two examples to get your understanding clear here. See, you're going to a mobile shop. Let's suppose you're going to MyG Mobiles, which is a very famous mobile shop in Kerala. Now MyG Mobiles can give you EMI options. There are two ways in which MyG can give you EMI. Case 1, MyG says, 40,000 is your OnePlus phone cost. You can either pay 40,000 to me now, or you can pay 11,000 per month, which is 10,000 plus 1,000 rupees interest. So 11,000 per month for 4 months, which effectively is 44,000. MyG can give you this offer, which means that MyG is providing you a delayed payment option. Option number 2, or the same transaction can be structured in a different way. How is it going to be different? In second type of transaction, what MyG can tell you is that, see, I have a tie-up with Bajaj Finserv, which is a finance company. What you have to do is that you have to just have a card of Bajaj Finserv. What you can do is you can purchase this particular mobile phone on EMI. So in such cases, to MyG, who's going to pay the money? It is going to be Bajaj Finserv who's going to pay the same 40,000 to MyG. But for the customer will still have an option to pay 11,000 per month for 4 months, 44,000, but that will be paid to Bajaj Finserv. Now, what is the GST impact of both of these transactions? That is what we are going to analyze. If the transaction is example 1, wherein MyG is selling the phone to the customer and cost is 40,000 and there are 4 EMIs of 11,000 each to be paid on 10th of every month. Any delay, there will be penal interest of 500 per month. Question is, how much will be the value of supply by MyG here? MyG is supplying mobile phone, which is supply of goods. Now the value of supply of goods, if you go look at section 15 valuation, 15 subsection 2 clause D says, any interest, late fee, penalty on delayed payment of consideration should be added to the value of goods or service. Now this is a clear case of delay in payment of consideration, and this interest and late fees, late interest, penal interest has to be added to the value because MyG, the supplier of goods, is providing the facility of delayed payment. So this will be added to the value as per 15(2)(d). But wherein it goes to the example number 2, wherein MyG is selling the phone for 40,000, Bajaj Finserv is paying 40,000 to MyG, but Bajaj Finserv in turn provides EMI facility to the customer. So as far as MyG is concerned, the phone supplies for 40,000. So if that's the case, there is a separate transaction. So MyG is getting only 40,000. That will only be subject to GST, only 40,000. The interest of 4,000 will be considered to be a separate activity of interest payment for loan services from Bajaj Finserv, which will be in the category of a separate contract wherein there is a service of extending loans or advances insofar as the consideration is represented by way of interest or discount, which is given in notification 12, wherein there is an exemption for that. So when Bajaj Finserv is not a supplier of goods, they're just providing loan services, that interest is exempted from GST. So interest is not added to the value in the second example. You can look at this notes because it's an independent transaction of providing loan facility. There's a notification which says such interest will be exempted. So when the interest becomes for the delayed payment of consideration and the supplier itself provides you that delayed payment of consideration, it will be added to the value by 15(2)(d). But wherein it becomes a third party separate transaction between you and a financier, then it becomes a consideration in terms of interest. It is not a consideration for the supply, thereby that is a separate service and it is exempted by notification 12/2017. Now let's look at the second clarification. If you look at, there is an exemption notification which says that in an unincorporated body, kind of a residential welfare association, generally every flat and every residential project will have a residential association wherein apart from the rent or apart from see, if you're staying in a flat or in a villa for rent, apart from the rent you would end up paying something called as monthly maintenance. So everybody who is a part of a residential welfare association, be it an owner or a tenant, will have to offer a monthly contribution to this resident welfare association. What will this association will do? They will procure common amenities using this particular money. Common amenities could include water, electricity, cleaning staff, all this common facility maintenance, and all that will be part of this particular monthly maintenance fee that you pay. So the question is whether monthly maintenance is exempted or taxable. They said monthly maintenance is exempted provided that amount is less than or equal to 7,500 per month. Now the government has clarified few areas in that, so it becomes important for our exam. So if the monthly maintenance is less than or equal to 7,500 per month, it is fully exempted. But if it's more than 7,500 per month, then you will have to ask one more question, whether the residential welfare association in total is getting more than the threshold limit of registration, or are they liable to register, or they are registered already. Then it becomes a taxable supply. Otherwise also it is not taxable, it will be still exempted. Let me add some example number to it. Say there are 10 flats, monthly they are paying 10,000, which means that in 1 month this residential association is going to get 10,000 from 10 flats, which means 1 lakh they'll get. In the entire year they are going to get 12 lakh rupees. By looking into this particular amount, it is more than 7,500, so it should be ideally fully taxable. But the total turnover of this residential welfare association is only 12 lakh, which is less than 20 lakh. They might not even need to take a registration, thereby this maintenance fee will not be subject to GST. But if that is not 10 flats, that is 20 flats, then annually they're getting 24 lakhs. It becomes taxable. That 10,000, entire 10,000 will become subject to GST. Now, say for example, instead of holding one flat in a residential project, I have 2 flats. It's just one owner. Will my each of the flat maintenance will get an exemption of 7,500, or should I club it? Each of it will get separate exemption of 7,500. So look at the notes. Limit of 7,500 is checked per flat or per house basis, since there are multiple membership given for the same person owning multiple flats or houses in one residential welfare association. So each flat will get 7,500 exemption there. So I will see you in the next session, and then we will discuss amendments into the next chapter. Thank you.